Okay. All right. Welcome to Mind Over Matter, the psychology of trading. That's my best ever airline stewardess voice or whatever. I don't know, announcer voice. We're really trying to do a recap of what we're seeing. We're trying to pay attention to what we're seeing people struggling with as far as the mindset part of trading. And what we really want to hear is from you guys what you're struggling with. Like we see posts, we see comments, that kind of thing. But today, what I want to do is have you tag us in Market Talk. We want to hear what you're struggling with. And, not today necessarily. And I mentioned that today was mark to market month end before open. Had a little bit of a crazy schedule myself. So my husband and son are out scouting for a deer hunt. So I got all of my stuff I normally do in the two businesses, plus my husband's. So playing double duty here. But trying to give that heads up about, what I'm looking at as far as market goes, even if I can't be streaming, still to understand where things are. So if you've been struggling in the last week or two, we'd love to hear what that is, what your frustrations are, and then we can go from there. In the meantime, Cruz, is there anything comes to mind?
Um, it's basically the same things really that I've seen. Just kind of just I don't know, just oversizing, but
I feel like that
maybe the
might be
same.
happening a little less
Yeah,
lately, especially with the
maybe.
the SPX race, where
Mhm.
it's more of the focus on that 5% position sizing and growing an account the right way as opposed to just YOLO trades. So I do feel like it's a little better, but there's definitely
Yeah.
still some struggles. So things that I've seen today, like I missed out on a $10 move on an ES long because I was
Mhm.
getting in the car to drive, or truck as the case may be. So I was getting ready to
Right.
drive and I thought, you know what? I'm just going to go ahead and close it here. This is nice profits. I took 8 handles.
Mhm.
It ended up moving an additional like 11 from right there, and then
Oh
took a
yeah.
little
Yeah.
short, grabbed that profit, and now back in long. So, that FOMO, that fear of missing out, is such a
Mhm.
big thing. And I don't care if I missed it. I closed it. I don't think about it again other than where's my reentry? What's my trade plan from right now based on the levels? So, like right now, I'm sitting here looking at ES. We're above the regular trading hours open. There is zero chance I would be short right now, none at all. So targeting overnight high, but it's having the key structures in place, like understanding where we are level wise. So overnight high 4336, that'll probably be a very nice long trade from 431450 for my entry. So we can't be worried about the stuff we missed. It's done, it's in the past, turn the page, move on. And I think that's the thing I've seen the most with frustration. I missed it. I closed too early. Well, move on.
Yeah. No, I definitely agree with that. And yeah, today's one of those examples too. It's just they just took it a little bit below the stop losses,
Yep.
and that there's not much we could do. The overall, the mindset to kind of look at this was just, you're practicing good habits, even if you're getting stopped out.
Mm-hmm.
You're controlling the losses, and in the long run, it's not every time that these moves happen right after you sell, right? So, I mean,
Right.
think of the last time you've done this, and if it is getting, yeah, I mean, if it is, common more so, if you do this um, more so than others, or if it's more like like multiple times a week, then maybe it's just entries. But these it's a little different here whenever you just sell right before, and of course we're all going to feel the emotions that, well, there's that move that we wanted.
Yep.
But yeah, I
And the,
think
the, the
I mean
TA is
it's
correct, right? So the
mhm.
TA is correct is what really matters.
Yep.
And
And that's
execution is situational, right? You might have a phone call coming, you might have something, you're walking into a meeting. We don't feel bad at all about taking profit where we took it. And if you were sitting in front of the screens the whole time, and this is an unusual time for me. I can honestly say my husband and my son have left without us on a weekday probably 4 times in our entire life. So it's like highly unusual. He's 22, probably not going to be, I mean, once he gets done with school, he will definitely not be around because he'll be moving into his life effectively. And so, you know, you take those opportunities, and it happened to be on a day that I could have been trading more aggressively. But we have to focus on the fact that we have our lives to live, and it's okay to miss moves. And the sooner you can get okay with missing moves, the sooner you're going to be successful. Where it just has to be like, oh, that was nice. Wow, dang, we like immediately popped to anchored VWAP. Look at that. I am
It also
exiting. I'm
does.
exiting my ES long here at it's 4326.50.
Nice. A lot of it is also how you bounce back. You know, I mean, it's, you know, it's not even really bouncing back. It's just, you know, you have to control your emotions. You can't let them get the best of yourself and FOMO into a trade or chase the move that you were looking to have, right? And it's just, you know, if the move happened, like, you can't get in, right?
Yep.
For example, I did kind of want to hop in right here, but I mean, it's just volatile. We're trying to form, you know, three soldiers here on the 30-minute. But as far as this reversal goes, for me to get in, you know, I would just have to wait. But it is important to just, you know, not FOMO or hop back into that move and chase just because you sold and right before this move happened.
Yep. Happens to all of us, and it's part of doing business, and we just carry on with it, and we don't let that affect our next trade, because that's really what happens, especially with newer traders, is you're like,
And yeah, that was
damn
a
it,
nice
I
close
missed
there.
that.
So good exit on that, Cedar.
Oh, that spike, the fact when I started to see the selling underneath the previous volume point of control, and we couldn't even tag. I mean,
Okay, so
our
yeah, the
volume rate.
hesitation,
Yeah.
SPX player in market chat said for me, I see it in front of me, but hesitate. Prime example, NVIDIA 430 calls 380 15 minutes ago. I saw it hesitated, need to work on removing hesitation on entering. So that'll all come with time as well. So hesitation is just, you know, it's, you know, you're gaining confidence each day, each setup, right? And I know it kind of hurts, but losses do kind of sting sometimes, and it could also, you know, it could affect confidence negatively. But you just got to kind of overcome that with time and just accepting that, you know, some losses happen. And yeah, it's really just most importantly, just kind of just time will over time you'll get more comfortable with entering, but you can't if you do hesitate and you know you see the move, then you got to still reward yourself on still seeing that. But you know you can't chase at the same time for
Yep.
that.
You
But
have
you
you have to
just
look at
gotta
the
you know
context, right? I mean, it's really of it
mhm.
doesn't matter. I mean, if you missed it, you're waiting on a back
Even if
test.
you don't have money on the line, yeah, you
Yeah,
still saw it and you still you know you that's exactly what you wanted to happen, right? So you're still learning and overall you know you take a lesson and you know you want to learn more than you know make money in a way, right? So
for sure.
well to be successful anyways. I mean there's some out there that just want to gamble and you know they're just doing this to just you know throw money away and whatever, have fun instead of like sports betting or something. But you know if you actually want to be successful in this, you do you know you got to reward yourself on that. And yeah, you just
I like that
you
point,
gain.
the sports
Yeah,
betting point, right? Because are you
yeah,
using this as recreation, or are you using it as a side gig? You're using it as a business that you are starting on the side. And you have to honestly like sit back and look and see how you're trading. It doesn't matter what your intention is. If you're thinking, you know, this is something I can make extra money, but then your actions are all gearing back to it's more like sports betting, more like gambling, then you need to
right.
have a good hard look in the mirror and decide, am I doing this for
What do you
fun?
want to do?
Right?
Yep.
So are you going out for dinner and a movie, you're entertaining yourself? Or are you like, all right, I'm put
Are
10
you
grand
actually
into this,
trying to yeah
make money. This
have
is
a
my
side
business.
business? Yeah. Because we all, I mean, we all want that, you know, that little side hustle, right? This is definitely one of the best side hustles. I mean, you could take a 30-minute break, look at charts, you know, and you know, just oh, this is a nice scalping. And, you know, if you're really good with scalping, or you know, you get good over time, it's just oh, here we could do this on lunch break, you know, just make a little bit of extra money, and now,
Right.
you know, that 9 to 5 has a little bit of extra cushion on top. You
And
know,
then
just doing
or
that,
even, you know,
yeah,
like mid-morning, you know, you're taking a 10-minute break, or
yeah.
you're trading futures
You
and you're
work at
trading
night
after
and
hours. Yeah,
or even if you work if you work mornings you could do futures, just one trade a day or one trade a night even, you know, and just
yeah,
slowly build that, and you'd be actually surprised with how much you know extra you'd make a year, especially if you're treating this, you know, respecting it as a business And you got to really, if you're doing that, you really have to be picky and choosy with trades. In my opinion, you have
Yeah.
to really, if there's no setup, you can't just be eager to trade just because, oh, it's lunchtime, it's time to trade, let's hop in a trade. There's no setup, just don't take it. You don't want to lose money either, because then you're kind of, you're walking backwards almost, right?
Well,
So
that's the whole
really,
delayed gratification. We don't have to be in something. We don't have to be,
exactly.
and you can categorize that as like in a relationship. If you're desperate to be in a relationship, everyone runs from you. And as soon as you're comfortable and relaxed, whether it's because you are in one
Yep.
or because you're just
Literally.
good at being at peace with yourself, all of a sudden, lots of people show
Boom.
up.
Yeah.
So
It's literally, yeah, that's how it
yeah,
happens.
I mean, trading and dating is basically the same thing. And I hate to say that, probably a little too cut and dry as far as how I think of things, but had a question from Pan 2030. So I'd mentioned mark to market month end, and I actually posted about this morning before market open in Market Insights. Mark to market month end is 2 days before. So it's the cash settlement day. So those traders closing positions today want to be cash settled headed into month end. So 2 days prior, the T+2 to the month end is mark to market. And then the next question from Stockit was, during the end of the month, do we bounce, or what do you think based on experience? My best answer for that is, if it were that easy,
We'd all be
we'd
rich.
all be rich, and then none of us would be rich because we'd all be making the same amount of money, right? Everyone would know, and then it wouldn't be an
Yeah,
edge.
yeah.
So it's not that cut and dry. You have to look at the context of what's happened in that month, in that trading month. And people think we're going to continue to sell off. Are we? We don't know. None of us have crystal ball. But if you look at the price action, if you look on the weekly chart, it looks like we're going to continue to head down. At quarter end and month end, it's very likely that a lot of those traders trading sizable, like $50 million accounts, sizable accounts, not, oh, I got a couple $100,000, that's nice. Sizable accounts are saying, I'm going to make sure my books are clean by month end, and I will start October fresh, really starting to, take the first couple weeks to put together my idea of, what we're doing, what we're investing in, what we're going to hold for long swings, what the thought process is. But it is definitely very much situational based, very much. So you can go back and search the term from me, mark to market month end, and you're going to see a bunch of content. Very often when we have a short position, which everyone and their brother is short as far as I can tell, which has been the right trade until, if you think about market on close at the end of the day, if you think about the last 3 minutes of a 30-minute candle or even a 15-minute candle, it starts to become something that you can look at and get a little better idea. I talked about it being aggressive directional moves. And that's what we saw. We saw it sell down. We sold down much further than I thought we would have. I actually thought we were going to take like 42.88.
Oh yeah, same.
And what do we hit? 42.76. Oh my gosh, we got the move of what I would expect to see over today and tomorrow today, and then an immediate bounce. So we don't have any candle bodies closed under the 42.80, which is a level that I've had in Market Insights for a long time. And I post all those levels because we have to be aware of the levels. It's not just about trend channels. Trend channels are secondary to me, because once we broke it, like, that was an important thing. So once we got to the 42.98, I was like, all right, we broke out of this downtrend. But taking the context in of what we're trading, not just we should definitely sell down based on what? What we have to think about is those that are trading the positions that actually affect what we're trading, the ETFs, right? So the underlying stock positions that affect the ETFs and the futures products, or all of the SPX, if we're looking at SPY and ES, what are they thinking? So those guys holding Apple, are they going to hold Apple into the end of the quarter so they're not cash settled to be able to open up on Monday and go, all right, what are we doing now? Clear direction, my book is clean. And that's what it boils back to. What they're thinking is not what I'm thinking. I'm trying to put myself in their shoes and decide, where are they going to say, it's a nice amount of profit. And that's where we should be exiting or we should be like thinking if they're exiting their shorts with buying momentum longs or hopping on. And that's what I've done, or that's what I did in my last trade, was go, all right, there's definitely, I tried a little short, took a little bit of profit, but we're not trying to determine what they're thinking. We're seeing where are they likely to be happy with what the profits are in the position that they're in. Because it's been obvious they've been short. No question. We're taking stabs at scalps and stabs at longer trades, but it's based on what they're doing. And it always goes back to that. They are who creates the chart. The chart is a representation of what the size traders, you'll hear me refer to that a lot. The size traders are doing is what we're trying to grab a piece of, as opposed to it should keep selling off, which is what I hear people say all the time. It should definitely keep selling off. I'm like, well, yes, except if you were short and you were happy with the profit, which I do all the time. Happy with that, taking it. So I guess that's my talk about mark to market month end. It could take today and tomorrow.
I got greedy this month.
Because then instead of being cash settled on Friday, they'll be cash settled on Monday, but it'll still be their account as, where they want to be. And then there's the month end, which would be market maker month end. So market makers, there's all kinds of talk about, like market makers manipulating things. Just to clear the air on that, they don't care about you or me or any of us at all. Market makers are there to provide liquidity. So if you're trying to sell something, they're a buyer. And if you're trying to buy something, they're a seller. They make their money in the fact that they buy at the bid and they sell at the ask. So they get the spread, and that's something that they have set up with the brokers in exchange for providing liquidity. So they take those, well, it's effectively a half a basis point spreads on a huge volume. That's how they make their money. They're not there trying to manipulate. When you see something that is structural, it's because the majority of the larger traders, the institutionals, the large prop firms, not funded like I am, or like a lot of our members are, because we're not moving the market with even 15 ES contracts. It doesn't affect it at all. Those trading 50,000 ES contracts on a personal account or on a company account or whatever that is, they're the ones moving the market. And they're the ones that have to be flat at month end, regardless of their position, because they get margin calls. So what we saw today, price action, was margin calls. It's irrational. They don't pay attention to levels at all. They are definitely margin calls. And when the broker calls and says, hey, you're short still, how come you didn't cover? All right, if you want to stay in this position, good for you. However, I'm going to need you to deposit an extra $850,000 by close of business today, or I'm going to liquidate you. So forced selling is the individual's closing positions, but it's also the margin calls from the brokers as, yeah, I'm just going to liquidate you. This is enough losses and I'm not going to be on the hook for this. So it's a fascinating time for sure. It's not always a short squeeze bounce. Sometimes if it's been a long month, we're going to have some selling because they're exiting positions, but month end and quarter end together, good times. Okay, I'm looking through see if there's any other questions. So we covered mark to market month end, but definitely at least go check out
GDP. Will there be a big impact on the market?
Thursday. Thursday's the day we're looking out for.
Right.
So yeah.
So I was like, wait, and then tomorrow is Thursday, yes.
Okay, so days.
Yep.
Go back.
I just got confused what day it was.
Yeah, I have no idea.
Thursday, it's I know I don't go out for days anymore.
I wake up, whatever my phone tells me to do, I do, and then I show up here.
There's no alarm. I'm like, cool, it's the weekend. No, but that is tomorrow then. And I think we're pretty bare on, I could be wrong on data.
Yeah, no, Friday's pretty mellow. Yeah, tomorrow morning pre-market is the big one, so definitely I'm not swinging anything into that.
And Friday just PCE. Oh yeah, okay, we have PCE at the month.
And actually, we have Powell talking tomorrow too. Where is Powell talking?
Oh.
So
Oh
he's
yeah, at 4
yeah, so
4
right
p.m.
at
Eastern
market
time.
close.
Huh.
So
I don't like that.
yeah, I don't like that either.
I'm taking like two. Like I'll be out of here at 2 o'clock tomorrow,
Right.
easily. Nope. But yeah, and then tomorrow it's just jobless claims and GDP at 8:30. So be careful with swings. 10 a.m. we have pending home sales. Then we also have Fed Governor Cook speaking at 1 o'clock. Whoever that is, actually, I need to see who that is. But do you know who that is? Governor Cook. I've never.
Yeah, no, I've seen the name. I'm not sure which Fed governor he is. He's not important because he's not Powell. There are a few. Kashikari can move the market. He's a little bit more well known for his positions, but I'm unless it's Powell, I'm aware of it. I'm aware that there could be something said, but I really don't put that much stock in it.
Yeah.
I'm probably just
Right.
like desensitized to the whole thing of like, yes, talking feds, there they are.
Right. You got to think also. I think a lot of there might be a lot of sitting out too for the remainder of the
Oh,
month,
I will tell
especially
you
if
once
this is shorts closing. I mean, they're not going to reopen and
they're
go
definitely
long for
not
a
opening
day.
positions. They're
Yeah.
definitely not. And that's the thing to remember is
I
that we
think there
might
was some
have,
covering right here with this push.
oh, it was a
And
lot.
yeah,
It
so
was
there's,
squeezy,
oh
squeezy.
yeah, the volume bars are pretty massive, even on the 30 minutes.
They're
You can
bigger
see
than
where
the
they
open.
covered right at 2:30 right here and right at 3 o'clock where we got some covers. Yep.
Yeah.
Right after that, yeah, that supply at from 11 a.m. supply right there got broken. They covered. Yep. Nice. But now it's, profit taking with longs, and now we just stop until close. So nothing really actionable, and yeah, not going to be swinging much. That's more so, the move that I was looking for today, and then to be done anyways and let it chop and burn for the rest of the month or whatever it wants to do. But yeah, we'll see what tomorrow brings.
There was a comment from Marksman Pro in Market Talk. Let me find it. He said, so Verde had asked him, hey, didn't you make 1800 in the first 30 minutes today? Don't be greedy. And then Marksman responded back, yes, but if I use the same risk on this reversal, it would have been 2000%. So you've got to be careful with that. And I see a couple comments of people responding ifs and buts, and won't go into the details, but we have to be really, really careful with the if I did that instead of because that is what gets you to take the wrong trade later. However,
Or hold too long and
when it's
hope for this
exited
to
too
happen more
early
often.
or when you missed it, you can definitely go through the mental practice of next time I see this situation, I'm going to execute a little sooner because I've seen this pattern now enough times. It's been over the last 50 times that I've seen it, 45 of them would have been profitable. So it can't just be that one time that's 2000%. But if you're seeing the market well, flipping directions is not a bad thing if you're seeing the market well. But we don't take it because the last one would have been 2000%. We take it because over multiple times that I've watched this, I have been correct in my assessment of what the market is doing. And then you've got your stops in place and you let the trade work for you, because that regret will absolutely just destroy accounts. And it's an ongoing struggle. I will say that was something I probably struggled with. It was probably 6, 7 years, 8 years. It was a long time, well beyond when I was profitable. I would exit a position too early, re-enter it, then it would turn against me, give back some of my profits because of the last trade instead of this trade. So not looking at something fresh each time was a huge piece. And for me, it goes back to greed. I didn't catch the whole move. I'm going to get back in. I'm going to catch the whole move, even if it was in 2 trades. So that self introspective question, why did I re-enter this? Was it because I saw a back test? My TA was still valid. I just wanted to make sure that I was selling into strength. And now I have confirmation that we're not turning around and selling down. Then that would make sense versus I wanted to catch the whole move. So you have to ask yourself those questions. You have to be super honest in your journaling.
Right. And then also something else to ask yourself and bring into perception too is would you have really held for this whole move. Like it's easy to kind of look back and be like, dang, right? But I mean, we would have probably saw, the comfortability of the 20 to 40%, right? Probably sold anyways.
Yep.
But and it's just, on to the next trade. Just, I mean, I guarantee would have sold. I wouldn't have waited till 357 to sell in Qs. I probably would have been out at, 355.50.
Right.
Or, as soon as we got break even, maybe, who knows? Maybe even before we got break even, it's just, and, that's just teaching yourself bad habits. If you're going to look and just be like, okay, well, maybe this trade's going to be, do this, do that, what just happened yesterday or
Yeah,
something,
that's
right?
the
Like, you
stars in the
gotta,
eyes. And that for me goes
yep,
back to greed. Like, oh,
exactly.
imagine if this does this again. Nope.
Right. And yeah, you can't, as soon as you start thinking like that, something's wrong. So you got to ask yourself, all right, why am I really holding this, or why am I really buying this? Right.
Well, it goes back to dating. We're going to go back into the dating analogies.
Yep.
If you're dating somebody and they liked you opening the door, for the car door, the restaurant door, or whatever, and you're like, okay, I'm being very gentlemanly. This is awesome. And then for whatever reason, that doesn't work out and you part ways, somebody went to school or whatever. And the next person that you end up dating is insulted by the fact that you held the door open. I can open my own door, right? It's that particular perspective. It wasn't that you were doing it to be disrespectful. It wasn't, it's just, I'm being a gentleman. I'm doing what, does it hurt anything? No, it's called respect. Totally good. But their perception of it is the same thing as the trade. And just because what worked for the last one, you're like, wow, okay, that went really well. Might not work for the next one. And so a dating relationship is the same as a trade. You're only as good as your last one. And you cannot expect the new trade to respond like the old trade did, because they are different. They're a different composition of people. In the dating scenario, it is a different person with a different background. But in trading scenario, it's a different composition of people with different backgrounds and different agendas. So try not to think of it just as the trading piece, but as human psychology, which is why Cruz and I decided quite a while back we were going to just do these, because it is the deal. You have to figure out your head trick, your head game on yourself.
Yep. Well said. And it's also really, a really nice topic to kind of even, keep reminding ourselves of repeatedly too. So we'll talk about this, forever. I don't mind.
Well, and there's a lot of stuff that I do that I don't, like I don't need to do New Traders Boot Camp on futures because I've already done one, and you can go listen to it whenever that works. Psychology is a whole different deal. We will keep rehashing it. We'll keep talking about it because it will always be an issue for most people until your executions are just relaxed and flawless. There's probably a very good purpose for doing some journaling and really just digging deep into what your thought process is. So we will be here reminding you of all those fun things.
And if there's anything you guys think of, or are struggling with personally, just even if you don't want to, ask in Market Talk, you can DM and just be like, what about this? And, we could always keep it anonymous if that be the case, if,
Right.
Whatever. But yeah, just, ask us whatever.
And one of the things
I guarantee we've been through it
multiple times, not just once. Hard-headed, hard learners. I think,
Oh yeah.
yeah, I'm like, all right, I finally got that lesson, because I kept repeating it as a mistake. And then finally I'm like, all right, well, if I'm going to survive this, I will be figuring this out, because this is obviously one of my big linchpins, obviously.
Exactly.
Something I was thinking about, just in comment to what Marksman was talking about, is looking at the difference in how the SPX race is going for Husky with the 5% position sizing and that risk management that he's using on his main account applied to a smaller account position. It's magic, right? He's building that account beautifully, and the gains are steady and consistent. And when there are losses, they're not account ending. You have to be thinking about, from a business perspective, you've got control of it. You're not just, emotions are running wild. And the term I like is when you're on a horse that's a runaway horse, do you like try to not pull the reins in? Do you just sit there and hope eventually it stops? Like, who's in control of what that ride is? And the answer is the horse. If you're not giving them direction, the horse is in charge. And the horse might want to go that way, and you're like, no, 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 that's the wrong direction. That's not home, or that is home.
Yep.
Who's in control of what's happening? And is it, the angel or the devil on the shoulders, or the good wolf and the bad wolf? All those different analogies are all there, but the one you choose to feed, the one you choose to focus on, is the one you get. So really look at your risk management. Look at your, if you need to have hard set stops, just straight, it's going to be 30% trailing. And if my TA was valid, I get stopped out, I might re-enter. But I can reassess what that is, as opposed to, I'm going to keep moving the stop, or I'm not going to have a stop. And then all of a sudden you took a full port account to zero that had $5,000 in it before, or in some people's cases, 500, or in some people's cases, 90 grand. I've heard all kinds of stories and been there, done that myself. You can't let somebody else determine your tempo. You have to be very consistent and very just methodical. I mean, it is just, if it's a small enough position, you literally like, oh, it got stopped out. Okay, moving on. If it's a huge position, you're like, what have I done? Right? And all that emotion, you've got the pit in your stomach, and then you just keep adding because you don't want to be wrong. It's just not, it's not a good combination. So loving the SPX race for that, because it is reinforcing what we're trying to teach.
And you just step back and, look at it over a couple of weeks, just say, oh, wow, it's grown this much, and it surprises you almost, how quick it grows, even with stacking the small gains and just eliminating the losses, especially the larger losses, right?
For sure. And larger as a percent wise, but larger also as continuing to add to losing positions. Instead of cut it, I become smarter once I don't have money in the market, because now I can look at things a little more objectively. I get my IQ points back that went away once I entered a trade, because that's all of us. When you're in a trade, there can be no more decision making. It can just be execution of levels, because your IQ, once it's attached to money, does not improve. And then you can step back and go, all right, okay, my TA was valid. I just wanted to make sure I didn't write it down and have to write it back up, or whatever that is. But asking yourself those questions, journaling is going to be the only way you can do that. Or you could wait for 5 years, lose a sizable amount of money, and then decide, and I'm pointing at myself right now, and then decide you should be journaling. Please don't do that. Please do not. It cost me way more money than it should have, because I'm hard-headed.
If you don't want to go buy a physical journey or journal, we have Amazon Prime, or you could even just do an Excel sheet. You don't have Excel?
Oh, yeah. Or handwritten even.
Notes on your phone.
You could have a trade sheet that's like
paper.
one notebook paper that's, here's the trade, print out a copy of the chart if you want to be like completely old school. I do think, when I say the term old school, they have taken out teaching cursive, teaching writing, because so much technology is involved in our lives, which I guess I understand. However, there's a brain-body connection. There's a neurological connection with handwriting something down. You own it a little bit more if you wrote it down versus type it. And so if you've been doing typed journaling, you're not going back, you're not reflecting on it, it's not really helping you. Notebook paper, printed out chart, arrows, notes, and the only one trade goes on each piece of paper. And I'm not going to lie, I've heard people say I take too many trades to do that. And I'm like, well, then you're over trading. Period.
A good little meme for that too to just think about is Bart Simpson writing on the chalkboard, right?
Yep.
And he's just writing the line after line, and he's getting it into his his mind, right? So that's exactly
that is an example of a NLP, neuro linguistic programming, that is a negative programming, because the brain does not hear not. Like, I will not throw. Well, for me, it was spitwads. As a kid, I was always in trouble for spitwads. So when I have to write lines that say, I will not throw spitwads, the brain, from a psychology perspective, hears I, spitwads, and then it's happiness, right? Because I'm bored out of my mind, done with all the work. Everyone else is still working. And I'm like, well, who can I torment? Let's see what we'll do. And that's the human psychology piece, is we have to focus on the stuff we want. So if you're identifying issues that you're having in your trading execution, you don't want to say, I am not going to oversize anymore, because that reinforces to the brain, I oversize. The not just drops out. It's, I will properly manage risk and use a trailing stop on every trade. And then maybe you write those as lines. That's positive NLP, but it's the same idea. What you focus on, what you get. And if you don't focus on anything, well, how hard would it be? So my guess is, so D Cruz is actually from, it's really funny. We grew up within 10 miles of each other, even though I'm 46 and he is not. There's a little lag on age there.
Yeah.
So like what,
Yeah.
47, I'm 40. How old am I? 47. And you're 30.
I'm about to be 29.
29. Oh, not even 30
Yes.
yet. Okay, so like pretty much I was graduated by the time you
Yep.
came around. But
Okay.
from a
Yes.
geographical perspective, within about 10 miles of each other, where we were born and raised, and then before he moved out to Virginia, we were within 10 miles of each other for the last, I don't know, 12, 15 years, a really long time. And we found
Oh, yeah.
that out later,
Pretty much.
you know, as we met on Bull Trades and just started talking about it. And so here's my question to you. If you were like, I'm going home, and you're coming from the East Coast, but you're like, I know where home is. I can see those mountains. I can get there. And you are hard-headed enough that you decide not to use a GPS or a map. You're like, it's that way, right? You're probably going to take a couple wrong turns. You're probably going to have to backtrack. You're going to spend more gas getting home. You'll eventually get there. Like, you'll get it. Journaling is your GPS. Journaling lets you reflect, lets you go, all right, this is obvious now that I've seen this in my journaling that I do this at least 3 times a week, or whatever that is. Take that time after market hours to really reflect on what you're doing to yourself, because it's you, it's not anybody else. And because we are our own risk managers, if you're not doing that, you will probably not be here in a year. And I would hope that for everybody, you can like have the staying power, have the figure it out ability to not take yourself out of the entire business, to not bankrupt yourself from a trading business perspective before you have a chance to become great. Okay, I gotta plug in my cell phone. It looks like I'm about to die. JW asked me about my ES levels. So I have all of the ES levels in Market Insights, but you know, if I zoom out, so I'm gonna flip my screen over. A close above the 200 daily moving average, and I'll post this in Market Talk. So 200 daily moving average is sitting, now it's actually come up just a little bit, 4303.25. We have a wick below and rejection. That's a look below and fail on a daily. So we actually tapped down below the April 2023 close and the June 2023 open, and a failure to hold on the daily. So I'd be looking at, from a bounce trade perspective, the June value area low, 43.91. I guess a short stop at the 43.36, which is the May high. But this kind of daily close, we just kind of want to see what the month end happens, you know, how it plays out. But I am definitely not short right now based on this price action. I'm definitely, and I don't like the term biased, because if you've got a bias and you're not really good at not trading your bias, then it will mess you up. So if you're like, I have a bias to the short side, however, I'm trading long, or I have a bias to the long side and I'm trading short, that tells you that you have a good understanding of, I'm trading the chart versus trading my bias. If you trade your bias and you're not currently consistently profitable, I'm going to heavily recommend you hang that term up and be done with it. So based on where we're closing, or where it looks like we're going to close, we've got 13 minutes, market on close coming in 2 minutes. If we close the daily above the 200 simple moving average, we're very unlikely to see continuation to the short side, but it's unlikely. I'm not saying we're not going to see it. I'm just saying we're due for a bounce. I mean, if you look at the daily candles, what have we had?
Oh yeah,
One green candle out of, well,
SPY
we've
is
got one
sitting.
doji. Yeah. It's,
Yeah, SPY daily is sitting right at the 200 EMA. Also, well, it's trying to reclaim it actually right now, so just slightly under it, but
yeah, and we've
we're
got a
getting pretty extended.
cluster of stuff from April and May that is support underneath us, which is what brought in the short covering. There's a lot of
And
4290, 4288, 4281. Those are all
gap
right
was
next to
also
each other.
filled.
Yeah, gap was filled like,
Yep.
you know, it's a gap on
Mhm.
SPY. The 200
Yep.
daily moving average on ES. I just don't see any reason to, if you're short and you've been short for a couple days, to risk that. So if you've,
Lock in that
taken
profit,
the
yeah.
majority of your profit already and you're like, oh, I'm going to leave, one or two, like 0.5% position or 1% position, whatever on, with the understanding that we could be looking at a pretty decent bounce here from continued short covering, all good. But if you're saying to yourself, we have to continue down, we just have to, once we're under it, under the 200 daily moving average, we probably will see continuation down. But until we get a daily candle close, and more importantly, a weekly candle, let's flip out to weekly. So on the weekly, 4269 is the 50 moving average. A weekly candle close underneath that, then I will completely switch my entire. I will be like we're short, and we're short to probably 4150. That's another 150 points down. But until then, I'm just going to day trade and see what things do, and probably start doing some
Yep.
initiative long somewhere in October. We'll see how that plays out. All right, market on close. Let's see what we have. See if it's. You got to be careful with market on close. I'd actually stopped posting it for a while because people were making trade decisions based on it. It is not how you make trade decisions. It is part of the context of what we're looking at. If we've got an extremely short day and there's market on close is like magnificently to the sell side, so 1 billion to the sell side, I'm like, that's interesting, because it should be some covering, some short covering. There should be a little bit of buy side. So maybe 500 million to buy side, or something like that, because they're not willing to hold it overnight. They're exiting their positions. Flip side is if they move in the same direction together, it's something to pay attention to, but not something to make decisions off of. Once you've watched it for like a year in some decently volatile markets, then you might start to see the patterns. But there's not something, people ask me that all the time. What does that mean? It's just a large sell side for how far we sold down today, or it's a large buy side for how far we sold down today. It doesn't tell me anything other than, oh, okay, so right now market on close and balance is 38 million to sell side. So we had a little profit taking on the longs coming into close. We did not see a massive, what did we have, like a 5 billion sell side or something recently that I was like, now that is significant. I think it was
Yeah,
Monday,
I think I remember that.
or Friday
Like,
sometime, I don't know. They all run together, but I was like, this one has my attention. Maybe even Thursday last week. Aside from that, you really can't just be like, oh, MOC was big, I'm going to, go short on that based on that. Danger. All right, anything else come to mind for you?
No, that's pretty much it for now. I'm just really expecting just not too big of a move into the end of the week. Sorry.
Yeah, should be
but-
pretty muted. I'm really expecting slow trade.
Mhm. Yeah,
Yeah.
really
So
boring. But
making
we're
sure
almost
we're
through it,
biding
so
our
I'm really
time.
happy. It made me really excited to type out October expirations this week. So
I saw that. Like,
RXOM and
happy.
yep. Oh, and XOM. Oh my gosh, I just checked it. It's actually at 120 now. Holy! So if
Man.
anybody actually diamond handed that, which I definitely didn't, yeah, congrats. But wow, yeah, we sold at 118. But
Yeah, that was
Jeez.
a beautiful trade for sure.
wow,
All right.
nice.
I will let you go, and I'll see you on Voice through the week, and then next week back at 2:30. Hypothetically, we'll have that. No. Yeah, 2:30.
Yeah, 2:30, whatever works.
Awesome. Okay. Talk to you later.
Cool. Yep. Have a good night.
All right.
And yeah, be safe, you guys. Do your journaling. Have a good night.